Lesson 4.4 is all about completed accounting forms and making correcting entries. So the first thing we want to talk about is what happens when posting is completed.
Mission accomplished.
And you're going to know that your mission is completed when you have checked 3 different things. The first thing to check is the journal, and the first place to look in the journal is the post reference column. So in the post reference column, you should see one of 2 things. You should either see an account number, and that would be for all our general amount columns, or you should see a check mark, and that would be for anything that uses our special amount columns. So we'll see check marks where we've used the sales and cash special amount columns, and then we'll see the account numbers where it's been a general column. The second thing that you'll see in the journal is the totals column. And underneath the totals columns, you should see one of 2 things. You should see a check mark in parentheses underneath the general column totals. And then underneath the special amount column totals, you should see in parentheses the account number. And that's because remember, we post the totals for our special amount columns. So we'll see under sales and cash our account numbers in parentheses. The final way to check if your mission is completed is by looking at the general ledger. There should be 2 things in every single general ledger. The first would be the journal page number in the post reference column on the general ledger. And the second thing would be that each ledger has a final balance. And then it is boom done. Now let's say you're done with posting to your ledger and you feel a little bit like Robb Stark.
Perhaps I've made a terrible mistake.
Then have no fear. If you've made a terrible mistake, the correcting entry is here. So in accounting, a correcting entry is made to fix a mistake that may have happened in the journal. And every single correcting entry has a source document that is a memorandum. So when we get a new source document, what we have to do is journalize this correcting entry, and then everything will be okay. So this is what a memorandum would look like for a correcting entry. Maybe you're hearing Harper cry. No need to cry, we can fix it. So the correcting entry will tell us what was done wrong. In this example, it says the cash payment of $140 for advertising on October 30th was debited in error to miscellaneous expense. When you guys see it in the form of a transaction, I think it reads a little easier. So this says, on November 13th, we discovered that a payment of cash for advertising in October was journalized and posted in error as a debit to miscellaneous expense instead of advertising expense. So what they're saying here is that it was posted in error as a debit to miscellaneous instead of advertising. So if we look at our T accounts, our 2 accounts that we're going to journalize here are advertising and miscellaneous. And advertising was what it was supposed to be debited. So if advertising is what it was supposed to be debited, then what we're going to do is we're going to credit miscellaneous expense to cancel out the error of the original debit to miscellaneous expense. So the easy thing is basically it will tell you in the transaction what should have been debited. Like this says debit instead of advertising expense. And then you just have to journalize it like we've been journalizing as normal. So we'll drop our date in there of November 13th. And then our document is the memorandum number 15. And then remember, we are always going to do our debited account first. So if I look up here, our debited account is advertising expense. So we'll debit that for $140. And then we're going to put our credited account, which was miscellaneous expense, also $140.
That was easy.